Hey there and welcome back to EV Equity Edge, your one-stop channel for everything electric vehicle stocks. Today, we're pulling the curtain back on NIO, a player that's been generating quite a buzz in the EV space. Buckle up, grab your notes, and let's dive into this thrilling journey. Let's dive headfirst into the roller coaster ride that was NIO's market action today. The day kicked off with NIO shares trading at an opening price of $9.97. While it may have seemed like a modest start, NIO's performance throughout the day revealed much more. The stock cranked up its engines and charged towards a daily high of $10.83, reflecting robust momentum behind the bulls. Yet, it's vital to remember that the road to success isn't always a smooth one. Even amid this spirited drive, NIO grappled with some headwinds, plummeting to a daily low of $9.79 at one point. Despite this downward pressure, NIO demonstrated resilience and fought its way back to close the trading day at an impressive $10.78. This powerful rebound from the previous close of $9.99 showcases NIO's dynamism on the trading floor. A noteworthy observation from today's action is the trading volume. A whopping 84.25 million shares of NIO changed hands today, far surpassing its average volume of 54.26 million. When we see volumes this high, it often indicates strong investor interest, suggesting that NIO was firmly under the market spotlight today. This increased trading activity results in greater liquidity, which can translate to tighter bid-ask spreads and improved order execution, particularly crucial for traders. On top of this, NIO's stock traversed a significant price range today, spanning a full 10.36%. This wide range can be indicative of heightened volatility, an aspect that carries both risks and opportunities. Greater price swings can present potential profit-making scenarios for those who thrive in rapidly shifting markets, although the risk of losses is also elevated. The broad range reflects the market's ongoing reassessment of NIO's value, particularly in response to impactful news or events. This tug-of-war between different investor opinions can often result in larger price movements. All in all, the combination of high volume and a wide range witnessed today underscores NIO's significant market attention and investor activity. With impactful news stirring the pot, the stage is set for some intriguing developments in the electric vehicle sector. Turning our attention to the headlines, today was quite a day for NIO. Firstly, a Reuters report highlighted that despite a general dip in Chinese passenger vehicle sales, shares of several U.S. listed Chinese stocks, including NIO, traded higher. This uptick is attributed to a recent regulatory overhaul resolution with Ant Group, a fintech affiliate of Alibaba Group. This development may have reassured investors about the regulatory landscape and could likely drive optimism for other Chinese stocks, including NIO. A more stable regulatory environment may pave the way for increased investor confidence, potentially supporting NIO's stock price in the near term. Switching gears, another significant development came from the China Association of Auto Manufacturers or CAM. The association had enacted a pledge among 16 automakers, including NIO, to avoid abnormal pricing, potentially stabilizing the industry's profitability. However, this pledge was retracted after Tesla launched a new referral program, which the CAM considered as violating China's antitrust laws. The cancellation of this pricing pledge could swing the NIO stock in both directions. On the one hand, without the pledge, auto manufacturers can be judged solely based on the quality of their vehicles. This situation can be beneficial for NIO, allowing it to command higher prices for superior quality EVs. On the other hand, established companies like Tesla, with their economies of scale and strong brand awareness, could afford to set competitive prices, which might pressure emerging EV manufacturers like NIO. Lastly, despite NIO reporting a 17% year-over-year drop in June deliveries, the stock has rallied over 5% since the announcement. Plus, a recent report from consultancy firm Alex Partners added fuel to the fire, predicting that Chinese automotive companies are poised to provide over 50% of cars sold in China this year for the first time ever. Such a trend could signify a shifting tide favoring newer EV companies like NIO, potentially boosting its stock price in the long term. However, investors should closely monitor the company's delivery figures and market share to assess the stock's potential accurately. As we venture into the realm of price forecasts, we're setting our sights on several crucial resistance and support levels that might steer NIO's stock trajectory. Starting with resistance levels, these represent potential ceilings or points of struggle that NIO's stock may encounter as it climbs. First up is the $11.21 resistance level. If the stock manages to rally and reach this point, we could see some selling pressure, as traders may deem the price too high, leading to profit taking. This process might cause the stock to pull back or at least pause in its uptrend. The next resistance level is at $13.01, a significant jump from the first. If NIO stock manages to break past the initial resistance and heads towards this level, it could be an indication of strong bullish sentiment or positive news driving the stock. However, at this point, again, investors may consider selling their holdings, potentially applying downward pressure on the price. The final resistance level on our radar is $14.87. If NIO shares are able to break through both earlier resistance levels and approach this point, it would signal strong upward momentum. However, the higher the price goes, the higher the perceived risk and potential for profit taking, so this level could again act as a barrier to further price increases. On the flip side, we have support levels that serve as potential floors or points where the stock may find a cushion during a downtrend. The first support level to watch is at $10.34. If the stock price were to fall, this level could provide a safety net where buying interest may pick up, offsetting the selling pressure. Further down, we have the $10.17 support level. If the stock breaches the first support level and heads to this point, it could trigger a resurgence of buying activity, slowing the downward slide. However, if the stock breaks through this level, it might be a sign of a bearish sentiment and could prompt more selling. The final support level is at $9.74. A drop to this level could indicate significant bearish pressure or negative news driving the stock. But as we approach this price, buyers may see it as an attractive entry point, which could help stem further declines. As always, while these levels can provide valuable insights, they are not guarantees of future price movements. Market conditions can change rapidly, and it's important for investors to stay informed and flexible. Well, folks, that wraps up our deep dive into the NIO stock for today. We appreciate you tuning into EV Equity Edge. If you've found value in today's analysis, do us a favor, tap that like button and help this video reach more people. Also, don't forget to subscribe so you won't miss our future content, and hit the notification bell to stay updated on all our latest videos. We strive to deliver top-notch content on electric vehicle stocks and the broader EV market, and your support helps us continue our work. If you're interested in more EV content, we recommend checking out our other videos where we analyze stocks like Tesla, Rivian, and Lucid. Remember, staying informed is key when navigating the stock market, so let's continue learning and growing together. Thanks again for watching, and we'll see you in the next one.